So there we go. We finished up this section here. So we finished 2 sections out of 10. All right. So let's see how far we can keep going. So if we keep this pace, we should be able to finish by tomorrow. Okay. So the next section that we're going to be taking a look here is going to be QuickBooks List Management, which is going to be 6% of the exam. So which is going to be approximately 3 questions. All right. So this section here, right, pretty much is part of chapter 2, 4, 11, 10, 7, 12, all of that, okay? Because this is going to be pretty much asking how you're able to edit a list, whether you need to add content, edit, delete, or merge, okay? Now, again, for every single list that exists in QuickBooks, they all have the similar or same functionality, right? So every list that you see, whether it's a chart of accounts, whether it's a list of all of your employees, whether it's a list of all the items that you sell, adding, deleting, editing, and merging all are the same, okay? It's just different ways to get there, okay? So again, this section is called list management. So just in general, okay, let's talk about just adding accounts in general or adding new entries. So in this case, if it's setting up a new customer or setting up a vendor or setting up an item or a list or something in the chart of accounts, okay? For people, obviously it's a little different, right? For people, how do we enter in a new person?
A customer, a vendor, or a
Mm-hmm.
name, or what?
Mm-hmm.
A customer?
Sure.
Customer,
Any
customer
person.
center.
Okay, customer center. What else?
Yes, you add a new, you add another customer. You
The customer
new
center.
contact. You no inside the list of the customer. You a new customer and you create another one.
Good. So, right, if we're in our customers list, I click OK. So if I go to, if for example, right, if I go to anybody that's a person, so whether it's a customer, vendor, or employee, right, if I go to customers, this one, pretty straightforward. You just click on new customer, right? So good. So I'm going to go ahead and write center and then new at the top of window, top of center. Okay. But what about items? If I'm talking about items, lists, chart of accounts, how do I create something new?
The the list.
You go to manage like transaction.
Not manage transaction. No.
Oh, on the list, a new item.
List, new item. Is there such thing if I go to list and is there such thing as a new item?
No, no, no. There. I did. No, I can't remember. I did. I had to.
Item list.
Yeah, I did. No.
You,
Okay.
Item
No.
list.
okay.
Starting from item list.
I item new. It list no list item. List item, and you create a new item on the bottom.
Good.
Bottom items.
Yes.
Good.
Create a
Good.
new.
Mm-hmm.
Correct. Okay, so that's what you're gonna when you're in the list of that particular list. So, for example, if I'm in my sales tax code list, my payroll item list, my items list itself, my sales tax, my sales taxes, all of those, whatever list I'm in, right? They all have the same functionality where you go down to the bottom of the window, you click on that drop up menu, and you click on new. So good. Okay. For items, go to the list. All right. Open the list at the bottom of list. Select drop up menu.
Lynn, what time are we back?
We were back about 2 minutes ago. I'm sorry. Well, actually, more 5 minutes ago.
Actually, five.
Me
Yeah.
too.
Okay. So drop up menu. Okay. And new. Okay. Okay. Or in this case, you are also able to enter everything new by simply right-clicking anywhere, whether you're on the list, whether you're in the customer center, whether you're in any place. You just right-click and you have the new option. Okay? Pretty straightforward. That's how you add content in there, whether it's a person or whether it's an item. That's how you do it. Good. How do you delete?
Right click, delete on the item or whatever it is.
Good. You can right click on items / entry, and you should have the available options to either edit or delete. Okay. Now, what's the rules on deleting? There's a certain condition you have to meet.
You delete. I forgot. You delete every. You void. Is what we learned yesterday, right?
Maybe when you deleting a transaction like yesterday or before yesterday, you have to create a new one, then delete it. Like a check or
In this case, no. In this case, there's a specific rule on when you can actually
Inactivate?
completely not inactivate. That's an option if you choose not to delete. Okay. Okay. What is the criteria you have to have in order for you to be able to delete a transaction?
That is not part from another transaction.
In this case, this is section, in chart of accounts, we did an example on when you can delete something, right? In chapter 14, we read upon when you can delete transactions, right? You can delete them at any time, but there's a specific criteria. What has to happen in order for you to be able to delete? Okay? There's a condition, all right? And if you choose not to delete because you can't delete it, nope.
The transaction list?
No.
Memorize the.
No. Okay? Okay? There's a criteria you have to meet. What allows you to be able to delete a piece of information? So, for example, how can I delete a chart of accounts, an account? What's the condition there that allows me to be able? Say that again?
It has to have no balance?
It has to not be used, okay? You can only delete if item, account / transaction has never been used, okay? If you have a transaction or an account or item that has been used,
For another transaction, you cannot delete, or
you're not supposed to delete.
That's what I told you. No, if it's part of another transaction, you cannot delete. You have to inactivate.
Good. That's the second clause, right? If you used whether an item, account, or transaction, you must inactivate. Good. Good. So then we talked about editing, pretty straightforward, right? You simply just right click anywhere, or you can go down to the drop up menu, you can edit everything. So that one is more or less the same thing as adding, okay? Ooh, okay, but we also have the option to merge, right? What was the step I have to do to merge? So I'm gonna put editing the entries as part of adding as well, because again, in this case, you could edit at any given time. There's no requirement, right? Because it's the same way that you'd be able to add a transaction, right? If you can add a transaction, you're able to edit the information at any given time, okay? So in this case, right, We're talking about merging. How do I merge two accounts together? There's a specific rule on how to merge. Okay? How do I merge two accounts together, or two items together, or two people together?
In the charger account, you,
It doesn't matter whether it's chart of accounts, item list. How do
you
I
select,
merge? How do
you
I
select
merge?
the name, and then
Select which one?
it says select account whose name.
You don't want to keep.
Good. You don't want to keep.
Mm-hmm.
All right. And what do you do with that?
You will merge the software account into computer and internet expenses.
Okay, that's an example file. But what's the idea? What are we doing to this account or this item?
You merge the account.
How do you merge it?
Oh,
There's no merge button on QuickBooks.
No. I don't
You
remember.
you must enter the account name exactly as it appears in the chart of account.
Exactly, right? You're going to first select the item that you do not want anymore, okay? You're going to edit the item or account information to match the account slash item exactly by name, okay? And then once you do that, and you press OK, you'll get a message window that asks, do you want to merge? Okay. And that's exactly how you do it. So you're going to take the account that you do not want. You're going to edit that account to match the exact information of the item that you do want. So in this case, for example, chart of accounts. If I do chart of accounts and I use my account numbers, I have to have both account number and the account name match. Okay? In order for me to merge those items. Okay? So I type in, I modify the account number to match the item that I do want. Press OK. You'll get an error message, or you're getting a win message that says this account already exists. Do you want to merge? And that's where you click yes. Okay. Now there's a condition on how you can merge two accounts. They have to be in what's the criteria there? How?
The same type of account.
The same type of account, right? So in this case, the same thing for item, right? It has to be the same item type in order for you to merge. So you can only merge items slash accounts if they are the same type. Okay, good. All right, see, that was section items management, list management. So again, this is more practice on how to create your list. So again, this is asking for both, not for both, for all, whether it's a customer, whether it's an item, whether it's an account, whether it's a list of all of your, payroll items. How do I add? How do I edit? How do I delete? And how do I merge? They all four items have the same functionality in every single list in QuickBooks. Okay. All right. Next section here is going to be items, which we know exactly what chapter that is. That is all chapter 8. Okay, so items and let's see, which is going to be approximately 8% of the exam, which is roughly about 4 questions. So a student should know, number 1, how to use items to perform the necessary accounting entries. So, why do we have items? What are items used for?
To create transaction,
What kind of transactions?
all kind of transaction. Yeah?
No, you cannot. Can you use an item to?
Purchase, order,
It's used to identify
invoice.
the product and service.
Thank you. Good. Items are used to identify
The product and service your business purchase.
the products, service. What else? There's more than products and services.
Business purchase
Business purchase and
sales.
sales items.
Okay, keep elaborating.
Progress, tracking progress,
Tracking progress. No, that's not what items can do.
process.
Process. No.
Keep track of your tax.
Taxes. Good. What else?
Subcontractor service.
Okay, good. To keep track of not services, but in this case, sales process. Okay? And sometimes you can use items to make purchases as well. So purchase of inventory items. Okay? You can't create an item just to purchase like a furniture for your store. No, that you can't create an item for that because that doesn't belong to the sales process. You're not in the, unless you are selling furniture, then yes. But in this case, you can't create an item to say I'm buying furniture. No, you're using it to keep track of your sales, which you can use some of those items to make your purchases if it deals with inventory. Okay? Good. All right. Next question asks, what are the different item types and how do you know when to use them?
Product and service.
Okay, for service. Okay. When you say products, when you say products, when you say products,
Yes.
what kind of type is that? If you go to items right now, I can guarantee you there's no such thing as a product item.
Inventory.
Inventory what?
Inventory part.
Inventory, good. Inventory part.
Okay.
Inventory part, non-inventory part.
Inventory part.
Oh.
Okay. There's a list in chapter 8. That list of the 10. Can you tell me what page that is, please?
Inventory assembly items. That's what you're talking about.
Mm-hmm. Those are all the item types.
Items, group items.
Mm-hmm.
Other charge items.
Mm-hmm.
Subtotal
Subtotal items.
subtotal items. Yes. Thank you.
Can you tell me what page that is that lists all 11 items?
287.
282.
Yeah.
282. Okay. So you need to know the ins and outs of every single item and how to create those items based on those criterias, right? You wouldn't if you're selling a product, right? Let's say you're selling a camera, right? You wouldn't label that as a service because it's an inventory part, right? Because you're selling that item. All right. You wouldn't use a subtotal item to keep track of your sales tax, right? There's a sales tax item itself. All right. Make sure you guys understand the difference between group and et cetera, et cetera. Okay. So making sure that you know what those item types are and how to use them in a particular form, or when creating those items, how and when to use those items. Okay, so here we go down below. When to use the items, for example, for the different scenarios. So for example, first one says for a product or at a specific price. What type of item would you create if it's a product for a specific price?
Like a camera.
Okay. What kind of, how would you, what would you, what kind of account, what kind of an item type would you create?
Inventory.
Inventory, what?
Inventory. Item part.
Mm-hmm. Or you can,
Non-inventory part.
correct. Okay, right. If it's a product that you sell, you have two choices, right? You either sell it, right, for a specific product at a specific price. You would use either inventory part or a non-inventory part. Okay? What if you have services for a specific price? What kind of,
The time.
say it again?
The time.
No time.
No.
In this case, yes, services are based on time. But my question is, if I'm going to be creating an item, I need to know how I'm going to create that item by choosing an item type. So what kind of item type would I use to create a service? Correct. You would use a service item. Okay. What about a unique product or service that have a different price point for each item?
The other charge?
Say that again.
Other charge?
Why would you create a product, a unique product, and put it as an other charge?
It'd be an inventory part, wouldn't it?
You can use inventory part. Good. Now, in this case, right, you could use inventory part or non-inventory part, right? Especially if you're using for a custom item, right? Now, here's also one thing here too is I'm looking for a unique product. What makes a product unique?
When it's custom,
When it's custom, and then how do you create a custom assembly? Good. Inventory assembly, when you create your product, that's a unique product to your business. So yes, you would use inventory assembly. Okay. What about one service or product? Okay, or in this case, I'm gonna mix this one up because it's pretty clear, right? You use either a service or a inventory product. But in this case, what if I want this to be a bundle? If I want to combine a service and a product, how do I create? What kind of item would I create?
A group?
Correct. Group. Okay, right? Where you can bundle up your items together into one bundle. Good. All right. So again, these are just a few examples. So other things that I would recommend you to do is just practice, like going through the book, because in the book we go through every single item, right? We went through other charges. We went through subtotal. We went through discounts. Okay? So make sure you read through the chapter 8, because in the chapter 8, they give you about 6 out of the 11 examples. Okay? Right? Few things that I think you should know too, since this is the more extensive version, is making sure you know what units of measure is. Okay? What is units of measure?
Time.
Not time.
Wait a minute.
Okay?
For the shipping, for the order charge. The,
No.
nope.
This is in regards to inventory. Why would you use a units of measure?
For to measure something.
No.
Nope. Just guessing.
For the average cost?
Not average cost. Why would we need to use units of measure?
That's in chapter 8.
It is in chapter 8. It's going to be the very back of chapter 8.
To track the inventory?
No, not necessarily.
Or because you buy him a big amount and then you separate it, you sell it separate. You sell it by pieces.
Correct. Right. When you purchase items in bulk, but you sell them individually. Good, right? Because it's always cheaper to buy in bulk, and then you can charge your customers a lot more money by selling it individually. So yes, that is units of measure, correct. All right, other thing that you need to know is making sure that you understand inventory assembly and how to use it. Okay, I'm not going to go over it because we already know what an example is, right? If you're creating a product, how do you make that? How do you create the product? You would use inventory assemblies, right? All right, we went over that in chapter 8. It's the very last section of chapter 8. Okay. So let's see what's next here. Sales. Now we're going to be diving into the sales process, right? Sales is going to be broken up, which is pretty much your customers. It's going to be broken up in chapter 2, chapter 3, and I'm going to throw in chapter 13, okay? Which is the estimates and sales orders, okay? So in this case, right, chapter 12, sales. First question says that who should be listed under the customer center?
For customers.
Exactly. Customers. Pretty straightforward, right? Or
And the jobs too, no?
yes, and the jobs. Good. All right. So customers slash jobs, or in this case, people you sell a service or product to. Okay. Okay. How and do you use to and navigate the customer center? All right, that's important, right? What's so special about the customer center?
To get to the customer, to your list, your transaction that you're doing, no? I don't know.
Good, right? It helps you when you navigate through the customer center. Let's talk about how. So you said we use the customer center, okay, to create the transactions, right? That deals with your customers. Right.
All the information about your customers.
That's good. So that's part of navigation, right? You get to view info about your customers. What else? What else do you see on the customer center?
Receive.
take payments from the customers?
Okay, is that going to be considered the transactions for customers?
Oh, okay.
Okay. What else do you see on the customer center? All right, we already talked about their information.
The, the val
The what?
the balance.
Good. Customer balance information's right here. Okay. What do you see here? What's all this about?
All the information, the balance and what they buy with the
Exactly, the transactions that you have per person, per customer. Good. That's what you can view on the customer center, right? You can view information about your customers, customer balance information, right? The specific transactions per customer, right? You have all that information in there, okay? And how you use it, right? You can be able to create all the transactions that you do with the customer within the customer center. Good. So let me see if I can push this forward, okay? Next question that we have here is how to complete the workflow from sales to making deposits. So this section is talking about the graphic depiction on your homepage, where what it talks about is how you get from here all the way to here. Okay? Right? What are the necessary steps that you need to do to record an invoice, then to record a payment, then to record a deposit? Okay? So again, when do you use invoices?
When the sale is known, sorry, again. Go ahead.
When you're making a sale,
When you make a sale, but you don't pay, and they don't pay on the same moment.
Exactly. Okay, yes. So when you make a sale, but the criteria here is the customer pays after time of sale. Meaning they don't pay you now, they pay you later. Okay? Good. Now, because we are dealing with an accounts receivable every time we do an invoice, that means we are obligated to use the receive payments, right? This is to, right? This reduces the invoice /AR, right? It reduces your accounts receivable, okay? When do we use a sales receipt?
When they pay on the same, when they buy.
Mm-hmm. So when you make a sale and customer pays
Purchase.
at time of sale. Good. All right. And of course, everything's going to get to the undeposited funds. What do you need to do? You need to make sure you make your deposits because that's where the money goes. Make your deposits. Okay. What are the rules on making your deposits? What should you always deposit first?
checks and cash.
Yes, checks and cash deposit first. What's after that?
Credit card receipt.
Credit cards, EFTs, everything else on that. Now, again, credit cards and EFTs, what do they have? Right? You have to calculate any service fees. Because, right, if you're going to have a credit card company collect the debt for them, they're going to want a part of the sale. Because essentially, if you're doing $1,000 charge, they're getting the money for you. right? So in this case, you need to calculate. And EFTs too, right? You can charge convenience charges to your customers because they want to use their bank-to-bank option. So yes, you do have to calculate that as well, okay? How does QuickBooks use the undeposited funds account to the checking account, right? Once again, this is in your book. Read the section under undeposited funds and read the accounting behind the scenes. All right. I can't remember what page it is on, but it should tell you right there, undeposited funds account. That page. Okay. All right. Okay. Okay, so chapter 3, additional customers, right? How and why to record customer credits. Okay, so here I already listed it for you, right? To make a return or a refund, right? If the customer overpays, you have to give them their money back, or you can use it for a bad debt expense item. Okay, now the question is how? So how and why would you record a customer credit? So in this case, first one, why would you record a refund or a return? This is a pretty straightforward answer.
So you know where the money's coming from or going to.
Okay. But in this case, why would I issue a customer credit if I'm doing it for a return and refund?
Record the cancellation. Oh, I don't know.
I can't okay.
No, customer satisfaction.
Customer satisfaction, right? That's what I mean by this straightforward question. Customer satisfaction. Okay, perfect. All right, customer satisfaction, right? You want to make sure that your customers are happy. All right, now again, that's given on customer policy, but that's why you would use a customer credit for this one. Now again, if a customer overpays, you have to reissue them a check back because they overpaid. So that's a pretty straightforward one. Now I want to actually gear that question towards bad debt expense. If you can use a customer credit to apply for a bad debt, how do you do that? There's a step-by-step process in your book that tells you exactly how to do it. So tell me what those steps are. Okay.
The menu list,
No.
item list, other charge, no?
Yes, good. You need to create
Wasn't
an
the bad debt
Other charge,
expense?
bad debt.
Create another charge.
yes, right? Well,
So go
first
to
things
list menu.
first, you need to have the account for the bad debt expense item. Okay, that's number 1. Okay, then you're going to create an item, right?
So you go to the list items. So
Mm-hmm. Which you're going to
Why?
create another charge, which you just said,
other charge.
for
And then you create and a credit memo.
credit memo. Okay. Create credit memo. Okay.
Then go to refunds and credits.
Yes, you're gonna click on the refunds and credits, which creates the credit memo. Okay. Which you're gonna be so credit memo. You're gonna create the credit memo.
Fill it out.
fill it out using the bad debt item. Okay?
Apply to invoice.
And then you're going to apply it to invoice. Correct. Good. All right. So remember, that's a huge step that you need to know because that was a section that's very important, especially when you're dealing with your customers, right? If you know how to create your sales form, you better know how to be able to factor in what you have to do when a customer decides to return an item, when a customer overpays for the item, or lastly, if a customer refuses to pay for the item. How are you going to take it off your books? Okay, that's very important. All right. Last section here in chapter 3, how and why to create customer statements. Okay, let's talk about the why. Why do you need to create customer statements?
To see the balance of every customer, no? Anything else?
To give your customers their account balance information. Good. What else can you do with that statement? Right?
Can customize the statement. I don't know.
Yes, you can customize the statement, but my question is, what is usually that statement accompanied by?
By periods?
No. A company,
no.
like meaning what is it? What comes with the statement?
With the statement. Okay. What is inside the statement you're talking about?
Mm-hmm.
So
Well, no.
customer.
Not what's inside the statement. I'm asking you what comes along with the statement. If you're if you're gonna send your customer a statement of everything that they owe you, what are you gonna ask from them?
Payment?
You're gonna ask them for a payment, so billing information, okay? Right? You don't send your customer a report for no reason. You send them to say, hey,
No, sure.
you owe me this money, so you better pay me back. So it's going to be accompanied with a bill, or in this case, an invoice, right? Or a bill payment, right? You're going to request them, and if for any other reasons too, you're also going to do statement charges, right? In case this customer decides to not pay, you can charge their butt and say, hey, you owe me $5,000 since you didn't pay me. I'm going to charge you extra money on top of that. That is what a customer statement does. It allows you to not only give them their account information, but it allows you to ask for their money, but also charge them extra money on top of what they already owe you. So that is why you would build those customer statements. Now, how do you create these customer statements?
Homepage statement if you did it with interview before, if you activate.
Yes. In this case, I'm just asking straightforward question. How do I create a customer statement? Just like you said, you go to homepage, click on statements. Right?
And then you customize whatever you wanna send to the customer.
Now again, this isn't the only way that you can enter in a customer statement. Remember, as a navigation question, you need to be able to tell me all 7 ways to enter in a customer statement. Okay? You could do it you could do it on the home page. You could definitely do it in the customer center. Okay? You could run reports if you'd like, but make sure that you exhaust every single way to be able to produce a transaction. Okay? All right? All right, chapter 5, which is other bank information, because the last section here, the last question is being able to do how to record a how to record a bounced check. Okay. So if a customer decides to fault on their payment or they send you a faulty check, right? How would you handle that?
Okay. Receive payment. Receive payment.
And then
You
what?
go okay. Here it said you go previous, but if you don't know, but you're supposed to choose the name of the customer when you have the screen, no? And then it's
You
have
enter
to
an
show you.
NF transaction in the banking account register.
Record the bouncing check.
Record. Okay, good. Okay, so that's the answer I'm looking for is when you're on the receive payments window, right? No matter who it is that wrote the check out, you need to locate where they
You
are.
locate who it is. So
Record the bounce check.
And then
button
you
at the top
click
of the window.
correct.
then you click the, yes, but before you now it say previous on the book, and if you're supposed to, if you write the name on the customer payment on the top, so it's gonna pop the all the balance of this
No,
customer,
no, no,
right?
no, no, no. You cannot use receive payments window to type in the name and it will not pop up anything. Right? Receive payments is
We
when
haven't
you
recorded it.
exactly. You can only locate that in the customer center. Now, in the example in the book, they just said that because that was the last recording payment that you've done.
Uh-huh.
Okay.
That's what I wasn't sure. So you have to locate first the customer, and then later you do the customer payment.
Correct. And you're going to find that through the record payments window. Right? At the top of the records payment window, you have record bounced check at top of
Yes,
window.
that's I understand. It was how to get to the customer. That was my problem.
Okay. So the only way that you're able to do it, you cannot do it through the receive payments. You can't just type in their name and it's going to pop up. No, because if you type in their name, you're saying that you are recording a customer payment. In this case, we're not. We in this case, this one, the exercise, it already gave you the information saying this was Bob Mason. So in this case, in order to locate where that NSF is, you're going to have to look in your books or you look in the customer transaction, locate where that payment was, and then you can proceed to do the rest of the steps. Okay? So good. We're going to do that, and then we're going to record the record the bounce check. Now, what happens when you click on that button?
On the record button, the bounce check summary window opens.
Okay, good. What information do you need to put in there?
The bank fee.
You're gonna tell them you're gonna tell QuickBooks what the bank charged you. Okay. Okay, so bank charges, the date that it happened.
The expense
class,
account
Mm-hmm.
and the class.
Expense and class. Okay. What's the most important thing?
How much do you want to charge your customer?
Correct. How much you want to charge your customer is in fact one of the most important things because he just out you on a check and you have to pay the $10 fee. Heck no, you're going to charge your customer accordingly so then not only do you get a profit out of it, but you're going to make the customer pay for their faulty check. Okay? So, customer charge. Okay. It's supposed to be amount to charge customer, but I put customer. Yeah, you guys get it, right?
The amount to check.
All right. So this section here isn't included, but I do think that you guys should know, just because you wouldn't be given this book if you had to skip this section, right? The more you know about the book and the more that you know about the program, the better you will be more successful to passing the test. So if they do, because this is part of the transaction, right? It's part of the sales process right here, right? Before you go into creating an invoice, you have estimates. So It's at least important to know just the bare minimum of what an estimate does. So how and why to create estimates. All right, why? Why do we need to create estimates?
Allow you to track the bids for your sales or projects.
Good. Track bids for sales, for potential sales for the business. Okay, good. Right? Bids meaning quotes, whatever you want to call these, quotes. All right. How? Pretty straightforward. You either go to customer center, and you got the homepage estimates, right? Pretty straightforward on how to do that. Okay. Now, what's the difference between an estimate and a sales order? Because
sales is the charge of the job done or the job
no.
An estimate is you don't know if the client's
gonna pay.
the transaction or not.
Good, right?
And the sales order is
They order the so they want to buy the whatever it is, sales or the products or the service.
Sometimes can be the half or no the total.
No, not that one.
it's a progress invoice.
Mm-hmm. Will accept order. Okay. Okay. Where in this one, a sales order, right?
They
Pretty
accept
much.
themselves,
Mhm.
Are very similar to estimates.
But this is
Sales orders have been agreed upon and will always end up as invoices.
correct. So in this case, a sales order is an agreement to for a guaranteed sale. Okay. All right. So they're the same, except the only difference here is one. It's just a random customer. They may take your bid or they may not. They might leave and go somewhere else. Where in this case, a sales order is a confirmed agreement that they do want the service for sure. It's going to turn into an invoice. All right. Make sure you know the difference between progress invoicing. What is progress invoicing?
When they pay a portion.
Mm-hmm. When you split up an estimate on a particular job, okay? And in this case, in other words, you could split the payments.
The charge.
Mm-hmm.
Okay.
Okay. Last but not least, how do we record a customer deposit? I think this is probably one of the most important things because if you can do a customer return and a customer or a bad debt expense item or even sell items to a customer, you need to know this section here, how to record a customer deposit. Because once again, you're not going to give your services out for free. You want to make sure that you charge your customer to ensure that they are going to commit to you for this order or for this job. So I think this is going to be a really important part of just knowing it in general in QuickBooks, because you should charge your customers at least a small down payment so then they are not fully, but they at least somewhat show that they are committed to the agreement. So how do you record customer deposits is, I think, one of the most important things that you should know. So in, I guess, summary terms, how do we do this? How do we record a customer deposit?
You would go to the invoice.
Invoice. And do what?
Do we create a section for other income?
Not other income. But you do need to create something.
From the home page, open the chart of accounts.
Okay, and what are we going to do in the chart of accounts?
drop down the account button and select new
Okay, and then what do we do?
for other current liabilities.
Good. We're going to create not a section, but very close. We're going to create an other current liability account. Because in this case, if a customer pays in advance for a service, right, that we haven't agreed to make a payment, we haven't agreed to finish, right? In our books, that means we owe the customer service. So that's why it's going to be considered an other current liabilities, because we owe them a service because they gave us money in advance. So in this case, you're going to create another liability, other current liability account. Okay, to record customer deposit. Okay. All right, from there, you have to create an item. Now, what kind of item?
Item and services.
Okay, that's to get there. Now, what kind?
And new item.
New item. What kind of item?
Service.
Service. Okay. Okay.
So,
Service item. And we're going to name this customer deposit. Okay.
And then enter the customer deposit item name number field.
Good. All right. So then the next step you have to do is you're going to have to record the customer deposit, right? You have two options. You can either use a sales receipt, or you can just deposit it right directly into your make deposits window. Okay. But in this case, in the book, it tells you to create a sales receipt. All right. And what that item is, you're going to be receiving the money from the customer, and you're going to record that item as a customer deposit. Okay. So record the customer deposit through sales receipt or directly into the make deposits window. Okay. Once you receive that item, how do you apply it to the invoice?
On the invoice, you add a line.
So first, we're going to create the invoice with the customer's sales info. So whatever they got, whether they got a service or a product, whatever they purchased from you. And you're going to create a new line with, and you're going to use the customer deposits item, all right, with a negative amount, okay, and that's going to reduce the payment, okay, and that's it. Good. So I think this is one of the important things. You might be asked a very general question on it, okay. Once again, the more you know about the QuickBooks, the more you will be successful in the exam. Okay. All right, it is 4:30. I'm going to stop here just because that's the last question of that section. So tomorrow we'll deal with reports. We'll deal with payroll. My gosh, we have a lot to do. And then we're going to deal with I just said reports again, and we're going to deal with basic accounting. So we have about half of the study guide completed today. So hopefully we can get through this a lot quicker tomorrow. The rest of this stuff should be pretty straightforward, as I've mentioned before. I already listed out which chapters those specific questions are asking from. So with that being said, I will post this actual worksheet, right, tomorrow when we complete the whole entire thing, okay? So with that being said, I'll see you guys tomorrow.
Lynn,